Welcome, ladies and gentlemen, to a new edition of our online interview presentation edition here. And we want to talk today for an update with Revival Gold and Hugh Agro. The CEO is here with us. Good morning to Canada. How are you doing?
Very good, Jochen. Great to be back.
Yeah, great to see you. Thanks, and in good shape. That's how it should be. Gold is also rising, 1824 already. That's what we want. We are quite close to a breakout, and it is fantastic that you are taking the time for our viewers for an update. So let me bring up the presentation to you, and I would say the floor is yours, and I will ask you some questions in between.
Super. Well, great to be back. And yes, you're quite right. The gold price is on an upswing here, and this is really what we've built the company for, on a brownfield site. And just speaking to the key highlights here, we've got a great jurisdiction. I was just out in Idaho meeting with the state governor and some of the people associated with the mining industry in Idaho, and doing our annual community open house. And I'll tell you, it's a welcoming place to be. That's a key attribute for our business. Secondly, we've got this infrastructure that we like to explain to investors. And thirdly, we've got a fantastic first phase heap leach restart for this operation, which is progressing along track and on plan. Resource update, as you know, Jochen, is coming in the first quarter. I've met with our engineering consultants this week as well, and that's making excellent progress. We've been drilling. We've been putting out drill results at Hay-B. We'll have some more results of our high-grade Joss target this year. So lots on the go on the project.
Short question. When you bring up the resource update and then you want to have the PFS by the end of next year, is that all financed?
Yeah, the resource update is, yes, we're financed right through to the first quarter. Resource update and the drill results we're putting out the rest of this year. We will have to look at doing some kind of a financing in the new year, I suspect. But we've got lots of milestones between now and then, and we'll be careful with our share count and our timing on doing a share offering when that comes up. I'll move quickly through Idaho because I know most of your viewers are familiar with the state and our location in the state. The project itself, the metrics, $100 million of capital. And at current gold prices, we'll be producing about $50 million a year of free cash flow. So this is a meaningful first phase to the project. You can see the infrastructure picture here. And importantly, our resource really is from the drilling up to the end of 2019. We've got 2020 and 2021 drilling to include in our updated resource. The main objective is to move from inferred to all measured and indicated resources, which is an update in the quality of the resource. And that will set us up nicely for the PFS to come by the end of 2022.
Would you stay in the calculation with $1,400 per ounce gold, because this is very conservative to today's prices, or would you move that, let's say, to 1,500 or 1,600?
Yeah, we'll be moving it up, and that's on the guidance of the engineers that have a pretty strict SEC process that they go through for giving us a gold price. So it's independent really of the company and more with the 43-101 technical engineers that come up with that number. It definitely will be going up. We're in an $1,800 gold price environment today, so I would expect something closer to that. Yes. I'll just quickly point out again this infrastructure. The key here in Idaho is we're on hydropower, which is carbon friendly. And I know there's an especially strong focus on ESG worthiness. Revival Gold's Beartrack-Arnett project is, in a sense, recycling that existing infrastructure and using carbon friendly power from the Idaho grid. So this is a site which really is in keeping with the times. In terms of next steps for this heap leach restart project, we've been doing column test work. The objective there is to bring our recoveries up. Currently, we're using 60% in our preliminary economics. The prior operation was at 70% recoveries. So we're looking to try and improve on the recoveries with 13 column tests currently underway. The other thing we've been doing is engineering field work alongside of our exploration activities to build on the geotechnical data we have so that we might improve on the pit slopes. And of course, that will lower our strip ratio and improve our overall economics. We've been doing optimization studies, particularly with respect to that second phase mill scenario, which although we're not currently contemplating in our economic studies, we're setting ourselves up to do so down the road. And then finally, I'd say that the environmental supplemental baseline work is also underway, and we're making very good progress with that. Remember, when we get to the end of 2022 with our PFS, we want to be in a position to have also lined up our understanding on the permitting, the baseline data, so that we can make a decision to proceed with that heap leach first phase restart. And then, of course, there's exploration, and I'll come to that now. Our land position, some 5,800 hectares. The main areas of exploration along the Panther Creek shear zone here, where we've got the bulk of the resource. We've got high grades in this system, upwards of 71 grams over 10 meters in the Wards Gulch area. And in the Joss area, where we've been focusing our current drilling, we now have 17 drill holes into the structure. We've got grades between 4 and 11 grams over mineable widths and about 1 kilometer of strike in that zone. So this is developing up as a very interesting underground target to complement our open pit resource, which is in the order of 2.8 million ounces at about 1.3 to 1.5 grams per ton in the indicated resource. We've also got satellite deposit here at the Haiti area, which is pictured off about approximately 7 kilometers haul to the infrastructure located at the center of the property position. There's a number of other targets on the property that we'll get to drilling next year. We've been doing all the preparatory work for that, including drill permitting and geophysics and soil geochem. For example, in the Romans Trench area, we've got close to 2 grams per ton gold in the surface mineralization in oxides. So this is an area that we want to get to next year as we continue to grow out the satellite deposits on the Arnett side of our property position.
But that would mean when you start like with the north-south pit, then Joss also, that you can process everything in one plant, right?
Well, we'll start with the heap leach, and so the focus of our exploration and building up that high-quality M&I resource has been on the heap leachable material. Mm-hmm. But then we'll go into a mill scenario, and that's where that underground material at Joss would go. And if you think about the scale of that resource there, or potential resource there, we're looking at something which would be quite a significant increase in terms of the production and the life of mine with a mill addition. So in the first phase, we'll do heap leach from both Beartrack and from the satellite deposit at Haiti. We'll see if we can develop up some of these other satellite areas of mineralization as we go, and continue to expand on that heap leach first phase. Meanwhile, we're building on the mill resource, and that's what we've been doing in the Joss area. And I'll show you some slides.
Yeah. Sorry, maybe I misformulated that. Fully understood, heap leach is the one thing, but on the other hand, you are building that mill scenario. But with, let's say, one or the other, you can process your whole land package. That means that yes, you do not have to build something in addition at Haiti, or that you have to do this and that. That's what I meant. It saves a lot of money, but you can really work out the 5,800 hectares with that.
That's correct. Yes. Yeah. And we've done all the metallurgical test work to feel confident that we're in good shape with our process selection and our costs at this preliminary stage. And of course, we've got the historic operation, so we know how the material performs at Beartrack. We're doing 13 column tests right now to improve on our understanding of both the Beartrack material and the Arnett heap leach material. And then we've done in the past 2 phases of met test work on the mill material, and we're feeling very confident about the 94% recovery from the process there. Now, there will be more test work, certainly, and including more variability test work in the mill scenario as we progress. But at this stage, we're feeling very confident about being able to process all of the material on this site with well understood flow sheets. moving to the next slide here, it's, I know, a very busy slide, but it's illustrative of the amount of work we've done since the last resource update. So this is the Haiti zone, and this is all of the drill holes that we've drilled since 2019 when that resource was done, about 200,000 ounces of gold. Most of it focused on infill drilling to upgrade the quality of that resource. The blue holes were drilled in 2020. The red holes are holes we drilled in 2021. We've released 7 of the holes last week from the 2021 program. We've got another 8 holes to release, and we'll have those out in December. And really what I want to show with this slide is that we've got lots of density of drilling that gives us high confidence as we head into that PFS stage. And the other thing I want to point out, the area of known mineralization is in purple shading. The area of soil geochem anomaly is shown in gold. It's a much larger area of interest, and we'll be out to that area next year with our drilling. You might ask, well, why aren't we drilling it this year? And the reason is that we have to get an additional drill permit to be out into that area of the gold shading, and we'll have that in place for next year, and we'll continue to expand this deposit. It's open in all directions. Mm-hmm. And I say all directions, it's you can see on the arrows here, we're open to the east, north, southwest. We're also open at depth. And one of the holes that we put out last week ended in oxide mineralization at 1 gram per ton. So we didn't drill that hole deep enough. It's within about 150, 200 meters of surface. I suspect that if we start poking some of these holes deeper, we may be even, in addition to expand the pit dimensions outwards, potentially take it deeper as well. So that's something else we'll be looking at as we progress. Mm-hmm. Here in the main Beartrack trend, which is pictured on this slide 10, we're showing you a long section, 5 kilometers of strike, where the mineralized resource sits. And here you can see we've got about 1.5 grams per ton in the open pit indicated resource. So that's the starting point. But as we spoke about earlier, there's this high-grade potential along about 1 kilometer strike at the Joss area. And so we've been drilling there. And we also know that the deposit's open at depth here in the South Pit and here in the North Pit area. And then we're developing some new ideas about where to take our drilling in the North Pit. So the story here at Beartrack is far from over. Our focus this year in the Joss area, multiple targets throughout, 5 kilometers of mineralization, and we're in a very big gold system here. I'll come to that in a moment. Here's focusing in on that Joss zone. So if you look at our index map here, the area of mineralization that we're dealing with at this point is in the center of the property position. You know, Jochen, they always say the best place to look for a new gold mine is in the shadow of an old gold mine, and that's exactly what we're doing here. This is the outline in the air photo underneath this figure of the prior heap leach pad. And lo and behold, the extension of the mineral resource from the open pit to the right of this slide is here in this Joss area. And again, about 1 kilometer strike, 17 drill holes. We've got average grades of 4 to 11 grams per ton over mineable widths. And then we've got a big zone of mineralization around that in a bulk mineable setting. So the results that we released earlier this year, we were getting 85 meters of 2.7 grams per ton, 50 meters of 2.8 grams per ton. We've got another drill hole right in between the two intercepts from earlier this year, which will come out here shortly. I would expect by mid-November, by mid-December at the latest. That's building out a very nice area of mineralization, very thick mineralization here, and it's open at depth. And you can see some of the results shown on this slide.
Maybe stupid question, but why was that missed in the past? I mean, those are outstanding results.
Yeah. So the focus of the historic activity at Beartrack was solely on the heap leach. And the mill scenario is a more complicated scenario. I mean, it will be a more capital intensive scenario. But I think it's worth the prize because we've got such a large resource here. We're talking about something that will be 15 to 20 years of mine life and produce north of 200,000 ounces of gold,
Whoa.
even on a more optimized mill throughput scenario, which is what we've been working on in the background here. So long answer, but Jochen, focus in the past was on heap leach resources. We know this deposit goes a lot deeper, and Revival Gold's drilling over the past 4 or 5 years points out the scale of this thing, and it's just massive.
Mm-hmm.
And I want to speak to that quickly now. As you know, I'm a mining engineer, so I'm not going to be able to do this justice. But the figure on the left of this slide describes what are called the emplacement mechanism for an orogenic gold deposit. Orogenic gold deposits are found all over the globe. They include some of the largest gold deposits in the world, such as Natalca, Paracatu in Brazil, Canadian Malartic in Quebec, and some of the more interesting projects pictured on the left here, Kittilä, which is the operation that Agnico Eagle runs in Finland, and Beartrack. Now, the reason why this is significant is that these deposits are huge. We're talking about deposits in the order of 3, 5, 14, 20 million ounces. They are massive deposits typically, and we've just hit the surface here with our drilling over 5 kilometers of strike at Beartrack. I think Beartrack's going to be better than 5 million ounces. We're currently at 3 million ounces, but it's continuing to grow. And why is that significant? It's significant because these kinds of projects are scarce around the world, and they're becoming scarcer. And you'll notice that all of the projects pictured on this page are owned or have some participation from major gold producers. And I believe that that's the case with our district that's opening up here in Idaho, in the east of Idaho, with Stibnite and with Beartrack. We're starting to show the world that we've got another very large gold camp developing in this corner of the States. I'll skip over some of the details on our market cap, except to say that you'll notice that we've had a pretty solid shareholder base right from the start. 40% institutionally held. Management continued to grow on its share position. It's a function of the confidence that people have in the story that we were developing. Even as the market's been a bit tough on the juniors of late, you can see that our shareholders are staying strong and believe in what we're doing and the results that we're getting. We still have very good liquidity here in this market and excellent valuation for those that are just getting introduced to the story.
And I think also Echelon has a $145 target, and Beacon has $2 target. I mean, this is 200 to 300% re-rate potential, I would call it. That's great.
And you can see on this slide why. This is our path to value creation, the way we think about things at Revival Gold, not just as geologists, but as engineers and financiers. How do we deliver that value to shareholders? Well, in our first phase of work, as I've described, we're taking our heap leach project forward with optimization and exploration. Currently, there's about 850,000 ounces in the mine plan. I think that ultimately, by the time that project is finished, we'll be mining 70 to 80,000 ounces a year of gold, maybe as much as 90,000 ounces a year of gold for 7, 8, 10 years. And that's the first way that we deliver value for our investors, is that first phase heap leach project. Meanwhile, we're continuing to explore and build on our resource. Currently, we're at 3 million ounces of gold, shown on the x-axis here of the slide. And the NPV, or the net asset value that we're driving from that resource, will only grow as we continue with exploration. I talked about some of our immediate targets: Joss, Haiti, Romans Trench. All of these, I think, will take us to a future scenario where we've got a mill and the heap leach together. And that is going to have a very big impact on underlying NAV as we bring economics to the ounces and the potential in this project. So that's how we deliver value for our shareholders. I think that's how we bring relevance to some of the larger institutional investors and corporates that are watching our progress. And in the meantime, we can do that from a very low capital base and a very efficient means, only 72 million shares outstanding in Revival Gold to date. So we're being very careful with our share count, with our spend, moving towards cash flow, and ultimately a big world-class deposit. This is the timeline for our plans going forward. Of course, we've been doing exploration and infill drilling I've described to you in 2021. That's going to set up our resource update, which we'll have in the first quarter next year. Meanwhile, we've been doing the engineering work, the environmental baseline planning, and all of the preparations for permitting, which will set us up for the PFS by the end of next year and a decision as to whether to proceed on that first phase heap leach. That's a 72,000 ounce a year program as we've currently contemplated it. I do think we're going to see that improve over time, and the mine life will grow. But that's a very solid first phase project. And then in the longer term, as we continue to explore over that 5-kilometer trend that I showed you, we'll build out a second phase. And our conceptual plans at this stage are for something that would be greater than 200,000 ounces a year of gold over 15 to 20 years of mine life. It'll take us longer to get there, but we've got all the pieces in place, the team, the asset, and we've got the financial backing with our solid institutional ownership.
Question about financials here. When do you think, let's put it that way, let's think about a positive production decision for the heap leach. So then you have to finance that project. First thing, where do you think the money will come from? How do you think you can do it? Let's say hedging, gold sale, project finance, whatever. And when do you think you will have then the heap leach in production? Because the potential mill scenario, I see more maybe 2025, 2026, right?
Yeah, that's a longer term project for sure. A timeline for what we're currently contemplating, and again, this is all very premature. We've got to finish the PFS and the environmental work that's required to get our permitting timelines or re-permitting timelines set. But as we're currently conceiving things here, we finish that PFS by the end of 2022. We'll make our production decision. If it's a go, then we go right into our feasibility, detailed engineering, and our re-permitting of the site. We think that all can be completed such that we can start construction in 2024. We may be able to start producing gold by the end of 2024, early 2025 from that operation. And the reason we can move as quickly as I've described is, number one, we're on a brownfield site, and we're keeping our infrastructure and our disturbance in the Beartrack area to that brownfield site. And secondly, because it's a simple process. We don't have to start building new bones to the processing facility. We'll just update, refurbish. And the main construction item with respect to that heap leach restart is to build the leach pads. We've already got the first leach pad area engineered and understood. We'll have a lot of work to do around getting it actually put into effect. But it's much less complicated, and it's a very well understood situation for us to be able to meet those timelines that we're currently conceiving. The mill scenario will follow that, and I think one of the really attractive things about our project is that we have that optionality, so that if between now and a couple of years from now we want to take on a more ambitious program, we can do that. And in the meantime, when the capital is scarce, as it is right now, we can get going into free cash flow with a relatively modest $100 million capital restart. We've got the shareholder base, including Orion Mine Finance, whose business really is around financing construction. And that's really their sweet spot, and their interest in us is they like our team's ability to bring a construction-ready project to their investors.
And it fits into their business.
Sorry,
right? And it fits into their business perfectly.
It does. No, I mean, we'll want to keep them honest, and we'll certainly be talking to others. But we really like the folks at Orion Mine Finance. They've been good to work with, and they understand our business. And so that gives us a head start, which is, I think, the answer to the question you were looking for, Jochen, on how we can think about tackling this 100 million of capital, albeit modest. It is still a significant amount of capital. And I think we'll want to minimize the amount of royalties and streams and those sorts of things, and focus on equity and debt to the extent that we can do that. Of course, it'll all be in the context of the market, and we've got a way to go here yet. We want to finalize our numbers in the PFS, but I'm optimistic that we're in the right gold price environment, and we've got the right shareholders and the right asset. I think that really sums it up. You've asked a lot of good questions. The main key points here that I think we can leave investors with is that this is a past producing, the largest past producing gold mine in Idaho. We've got a real head start in terms of being able to get to free cash flow in this gold cycle. $50 million a year of free cash flow at current gold prices. But beyond that, we've got a real catalytic opportunity with our exploration, uncovering this massive orogenic gold system and the potential that comes from a mill scenario. It's in eastern Idaho, right in the sweet spot for investors in this climate, with ESG aspects, attractive ESG aspects, and very good geopolitical risk attributes. That's our story, Jochen, and we're continuing to progress. We'll have drill results coming out over the next couple of months, a resource update in the first quarter, and I believe we're doing all of this as the gold price is about to take off.
Definitely. Thank you very much to you. That was a great presentation. And I have one little question. Of course, gold prices to take off. I see it the same way. And we are already bullish for next year. $2,400, $2,500 in gold, and also longer term, we can easily imagine the $3,000 because money printing will never stop, and it is still a nightmare. But what interests me is also, as a last question, could you finance the mill expansion phase with the heap leach?
Yeah, our preliminary numbers indicate that we definitely will get a nice credit from that. It's in effect a bootstrapping, if you like. We're borrowing from the Australian model. I don't think we'll be able to cover off the full amount of a potential mill phase in the operation. Orders of magnitude, a heap leach at 100 million would suggest, the mill scenario in the kind of context we're talking would probably be something in the order of 400 or 500 million. So, if we've got 4 or 5 years of free cash flow, that'll knock back the net for a mill scenario for sure, and it will be attractive because we'll get our understanding of the site. We'll have our equipment started in. We'll have our people sorted out. And I think it's always better to phase things from an operational point of view than to count on being able to move right from 0 to 60 miles an hour quickly. We'll progress with something that's manageable and that we can deliver on.
Fantastic. Super. Hugh, thank you very much. Wish you all the best for that. And please keep us posted and updated. And yeah, we look forward to some more good drill results and, of course, to the resource estimate then in the first quarter next year.
Thank you, Jochen.
Super. Thank you very much. Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold, and you heard it. The Beartrack-Arnett project is progressing extremely well. Great drill results, open pit heap leach scenario, followed by an underground mill scenario. I think there is a lot of here, how can I say that, cream on the pie, I would say even. And the management is fantastic. Only something like 72 million shares so far outstanding. So they are very restrictive with what they do, meaning saving money, making sure that there's not heavy dilution, and a great shareholdership with Orion Mine Finance also on board. So I would suggest that the mine financing for the first heap leach phase shouldn't be really a problem, to be honest, and we only talk about $100 million. But what I really love is also the long-term perspective with the company, with the JOS target, and bringing that whole thing up to well over 5 million ounces. So then they would be really in the game, and maybe also a possible takeover target? We will see. Stock price is definitely too low. Even Echelon and Beacon Securities see the company between $1.45 and $2 as a price target here. And I would really urge you to have a look at this fantastic company. I'm a shareholder of the company. I will stay like that. And thank you very much for watching us, and bye-bye from Switzerland.